Welcome to the Broken Pie Chart Podcast, episode 358. I'm your host, Derek Moore. With me once again is Mike Snyder and Shane Skinner. And I don't know, Jay, did you get lost? My semi-permanent co-host, Jay Pestrichelli. I think you got lost and you went into the wrong room.
I'm now like 1/16th co-host if I semi that thing out, right? Well, it's good to be back, Derek. Great to be doing this with Shane and Mike. Looking forward to it today.
All right. Well, first we have to gloat where we can on what we got right in 2025, and then we'll go to 2026. We're going to be talking about markets, rates, the dollar, gold, Bitcoin, where we think things going, where inflation's going, our normal kind of year-end, start of the year show. So first of all, when you look at, let's see, the S&P 500 finished at what, 68.4550, I think? Was that right?
Yep. Just under that 68.5.
And look, there's a lot of stuff on here, but it's kind of like golf. If you want to win one, it's kind of, the Masters is what you want to win. You want to pick and you want to nail the end of your S&P. Of course, that was me. I had 6,800. I was closest to it.
Wait, hold on. I got to ask Mike and Shane. Is this the way it goes? Now that I'm not here, you guys just let him go on with his baloney like this? Is that what happens?
Yeah, we don't talk till the end.
He gives permission.
We give our movie recommendations at the end.
Oh my God. You missed me, Derek. I know. All right. Yes, you got the big one, dude. Nice work.
You were 6,500. So
that wasn't even close.
No. And you said 6,500 for the high. I was at 70.30 for the high. The actual high was 69.45, something like that. And yeah, then here's what you got right. Oh, I'll just mention, I got inflation. I was the closest to the inflation change year to date. The Fed funds high range. Yep, I got that. I also said the Fed funds, they weren't going to lower. So apparently I was wrong there. You got the dollar index. You got gold. But look, Jay, you said gold was going to be 3,200. That was the high choice, the high pick. You were only off by like 1,200 points, but you get it because you were.
Wait, was it the closest one?
It was the closest one, so it's yours.
Let's move on to the next one. That sounds fine.
Yeah. No, you got it. You got it. And I think you nailed GDP. You were the highest pick on GDP, 4% for 25. I mean, we won't actually know until March what the full year is, but it's trending towards you getting that. So all of a sudden, no recession last year. I'm trying to think what else. I couldn't even win my damn Bitcoin thing. I said 50,000 and somebody else said 105, so they were closest. Like I finally got Bitcoin not to be positive, and I didn't win.
Well, it still was positive for the year, though, wasn't it?
I don't know if it was. Shane, do you know? I thought it was down for the year. Maybe I'm thinking of MicroStrategies.
Well, that would be true if that was the case. But I think
yeah, MicroStrategy down. Bitcoin was down.
Oh, okay.
Bitcoin was down about 5-6%.
Yeah.
Man, all that churn and down 5 feels like a flat year to me. Damn.
Yeah. It does because it's, Jay, wouldn't you say, like, for all the time spent by investors thinking about Bitcoin between MicroStrategies, Bitcoin itself, just other crypto, like it feels like a lot of time and mental effort just to go essentially nowhere, right?
Yeah, you could say that about a lot of things. It sure felt more volatile than the end result, beginning of year to end of year. I would say, right, because what did we peak out at? 125, 127, dropped down to below 80 at one point, right? 78, I think was the low. I could be wrong about that, but at least the recent low, I'll put that, because that's the thing about Bitcoin. There's so much recency about that asset class. But if you look at the vol, I called it an asset class. Yes, let's not get some commentary about that. Let's just call it what it is. But if you look at the volatility of it right now, what are we, 40, 35, 40? It's like totally calmed down. So, who knows? I think everybody was planning on another one of those like minus 80% drawdowns. It's had 3 of those so far. Part of me thinks like the fact that now there's all the Bitcoin ETFs that hold, I'll call spot, physical Bitcoin, that hold those, I think it's added a bunch of stability just into the portfolios, right? So I don't know, the the volatility certainly seems to be, especially with what we just went through, definitely seems to be coming out of that investment choice that you can make.
All right. I think we can move on from 2025. I'm just happy I won the market one. That's the big one.
Clearly the most important. Yeah, good job.
I think it is. I obviously think it is. So, all right. So there's 4 of us on here, and let's see how we'll do this. We have and let me just say to the audience, we say this every year, like this is really just kind of a fun exercise we go through. You seriously should not trade off this. I mean, really don't trade off this. We buy hedge, we buffer.
Just fade me. Just don't do what I do. Do the opposite.
Okay. So, this is just in jest. This doesn't change anything really we're doing. And take this for what it is, just a little bit of fun. And it's bragging rights if you actually are correct. I won't go back to 2024 because I was wildly off that year. So that didn't happen. All right, let's go to, first of all, let me start with an easy one. Recession. Nobody said that there would be a recession except one person. Shane, you have a recession happening. Like you're the outlier. What's going on there?
Look, I figured I would be the only one who said it, and I'm 50-50 on it. But I think we're seeing a slowdown in consumer spending. Rising debt versus savings, job insecurity with layoffs in certain areas. I see my youngest brother coming out of college, and he's not loving the side of the job market, at least for new entries right now. There's another thing going on, and again, I'm probably making this bigger than it really is, but. So my family is involved in farming. We own some farmland across a couple different people, and my grandmother's one of them. And we ran the math, and she is set to bring in 82% less on her farmland than the lowest amount she's ever made over the past, I believe, about 15, 20 years. What that actually means for farmers in the broader economy, I don't know 100%, but it's pretty significant.
All right, so Shane, hold on. I got a follow-up question on that. Please. So if you're doing this math, right? So right. Is it lower revenue? Is it higher cost? Is it
higher costs mainly? Higher costs.
Okay, so it's net.
Yeah. The yield was great. Okay. Crop prices are fairly low right now. It's not like she got an incredible price either, but the expenses itself that go into it have risen, and the cost to sell or the price she's selling at the crop hasn't risen nearly as much with it.
So yeah, so last year she made $100. This coming year she's going to make 18.
Yeah, about.
Ouch.
Jay, a little bit of channel checking, right? I mean, channel checking is when you look at areas to see what's going on and you extrapolate that out to the broad market. Like Jay, I remember you were in Jersey City for a while by that mall. Didn't I work? I worked in the same building, not at the same time. Remember we used to look at like the size of the parking lot to see, to the economy. Like, oh yeah, no, there's not as many cars, right?
Yeah, and you'd have to drive by the Port of Newark too every day, right? You could kind of see the amount of everything that's queued up and the containers. You're a big container guy, Derek.
That's right.
Keep track of. So I don't know if you've talked about containers lately, but
a little bit.
Yeah.
I had to mention it a couple weeks ago. I had to get him going.
Yeah, interesting channel check of the farmland. So look, that seems contrary to the focus of what at least this government's talking about, taking care of farmers. So interesting. So maybe prices will rise, Shane, because look, not everybody's going to be doing things at an 80% reduction in bottom line.
Right, absolutely. And I also realize that, given the situation, it could be a rarity. It could just be that people with smaller amounts of farmland get priced out, and we continue continue to see larger conglomerates sort of built up in that space, managing and farming massive amounts, and just the small time farmer slowly fades out, which I wouldn't be surprised if that happens. And I also don't think it necessarily means the economy's headed for trouble, but it's an interesting observation. So I had to.
All right. So we'll take this. I brought up the recession first, but I think we start with the top line, the big enchilada, because I won it last year, the S&P 500 end of year. Obviously, Shane, this flows into your expectation. Everyone, and so it was the four of us and then some other people at the firm, put in these. You have a negative 14.54% expected S&P return in 26, an end of year at 58.50. If you think there's going to be a recession, that makes sense because let's face it, when recessions happen, markets tend to sell off a little bit. So I get it. I think that's anything else on your 58.50. And we know the reasoning now, and that's why I asked you about that first.
No, I mean that's mainly it. I'm not expecting a depression in the future. I think we might see a little bit of cooling off. I think growth might stall for a little bit. I've said my piece about the circular financing and what's going on in the AI space. And, at the end of the day, I could easily be proved wrong, but think this.
Enough of this bearishness, though. Yeah, I want to, Snyder, let's bring a bull into the conversation. Please. So, all right, you're at plus almost 14%. No recession, 7,800 on the nose. So what goes into this one, Mike?
Yeah, I think it's, a combination of, margins continuing to improve. Obviously I have the EPS moving up to 330. I wanted to be even more bullish. I couldn't make the numbers work. I couldn't get my EPS or the forward PE to spots that I felt were reasonable. So I think the PE does tick up a bit to get us to that number with a 330 EPS, not to jump around to our other predictions, but
no, bring it in because Shane has 158.75 as the EPS. Naturally, if you're going to be going lower and there's a recession, you're at 330. 330 is above the current estimates. I think the estimates for next year are, let's say the forward 12 is 299.66. So you're, 10, 12% ish above that. And, okay. But I see what you're saying. Like you couldn't get to more EPS growth. So you couldn't get to more S&P without making the multiple extrapolation like really wide, right?
Yeah, that's right. I think so. I have a high of the year at 8,000, and I think maybe it touches there, but I think the PE is going to get a little bit stretched for some investors, and that's when we see a little bit of a pullback, not because of an earnings issue or a profitability issue, but more so just investors being less willing to pay that multiple.
All right, Jay. We got to talk about your EPS because you are the highest estimated earnings per share, but you only have a gain of just under 6%. So what's going on here, Jay?
Yeah, I think that the market will actually, the way that you could interpret this is a little bit of catch up here on the PE ratio. I actually think the economy's strong. But just a couple market dynamics caused me to give a low S&P. I came in at 7250, which is about a 6% increase. It was not my original thought, right? But then taking a step back, second year of a presidency is always the worst year. It's really rare to get 4, I should say, double-digit years in a row. So I brought it back just on regular trends, but I am still extremely bullish. And so I do think EPS goes up. I just think that we saw a lot of the premium in the market this year. And that was it. So it's I think a slow year, but still strong EPS growth. I went like blow your mind away number. Like no one's even close to my number that I put here. But every once in a while, you can surprise people with that stuff. So that's it.
You know how that happens. So that's about an 18. Is that 18 and a half or is that 18 trailing PE? If the number comes in at 7250, I guess I could do the math.
Yeah.
7250 divided by 400. 7250 divided by 400. Yeah, 18.125.
And that's still higher than average, right? So it's not crazy numbers, but to have the market land where I think our average, by the way, I didn't take Shane out, right? But including Shane's average, right? The group is averaging what? 7,300. If I was to just put him in here, just, null out that thing, we come in at like 76. Mm-hmm. So 7,600 is obviously a pretty strong one. That's like what, 10%, 11%. If that's our average, we're talking about more expansion in the multiple, right? So I don't know. Maybe this is that year where we get a little true up and the fundamental investors get their way.
You have a reduction in the trailing multiple of almost 29%, but you have earnings growing on a per share basis 33%. And that's like an interesting dichotomy that we haven't seen in a while, where EPS is rising, but investors are not willing to pay as much. Probably,
I would say don't confuse my picks, Derek, with a consolidated single story, right? There could be multiple stories going on in my predictions here.
Well, the dollar will be later, but I think I said to you when we were talking recently, if the dollar were to go down into the 80s, that totally could happen. All the multinational companies, their earnings, their sales get juiced higher because the lower dollar, but you kind of move back the multiple. Like that's a scenario that can happen.
It'd be pretty extreme to make all that line up. And it wasn't the story I was thinking. I was looking at them independently. I think strong economy, good earnings next year. I think all of the advancements that we're making from the technology side will find its way into earnings, but just where we are in the cycle, I'm a little less bullish on where the S&P lands.
All right, I might as well give mine. 78.89. It's my year end. I have us hitting 79.50. My low is 61.60. So I do feel like we are due for some sort of a cleaning out correction, but I have about a 15.25. I got mine, honestly, from just taking what I expect the forward 12-month EPS estimate to be at the end of the year next year. And I kept like a 20, I think I was at like a 23 multiple. Yeah, like a 22 multiple. So kind of more of the same for me. With a drawdown, 6160 from here is what? Is that 8%, 9% drawdown? We didn't talk about the lows for everybody, but Jay, you're at 6,500. Shane, you are at 5,700. And then Mike, you are at 6,500. So, okay. Anything else anyone wants to add to the S&P discussion? I feel like somebody's going to be really right, and that could be Shane, or everyone else will be really right, and Shane will be the outlier that's wrong.
I hope I'm wrong. I think I sent in the email when I said.
Are you doing this because you're like, oh, let me throw an outlier in?
I mean, not necessarily. I mean, I wonder if it's also a midterm year, right?
Weakness in the midterm, sure.
Can be sometimes weak, right? And I don't know. There's some stuff going on. You're never going to be able to call out the black swan, right? But if for some reason slow down in earnings, right? Slow down in growth. I look, the level I said for the low, right? The 57, like that's where we were in the beginning of March last year. So that's still not that.
Pause for a second on that, because I think that's important to be like, we could go back to where we were in March of last year if we went down to 5,700.
Yeah.
That's, put that in perspective. I mean, would that be bad? Of course it would be bad. We don't want to, we'd rather the markets go up, but that's not Armageddon. That's not the end of the world.
Right. Right. It's not 4,000. It's not even 5,500. We bottomed out.
Not where we were in April.
No, it's not. So it's, I don't think a pullback this year is bad or ugly or has to be indicative of that we could get a pullback and maybe no recession. I don't know if there's some profit taking, and that's, if you bring up VIX later, we'll get into that. But
we'll talk about VIX for sure.
Yeah. I don't necessarily think this is something that gets super volatile necessarily either. Kind of like 2022.
Jay, remember we did this show, was it 23 or was it 22? Where, what was it? 29 of the leading 30 economists said we would be heading into a recession. Was it 23?
23, because everybody thought we have to have a recession after what happened in 2022. Yeah.
What's the prevailing story right now that everyone is saying is going to happen?
This is another thing that made me less bullish, right? Which was there's nobody predicting what Shane is predicting, right? And I'm not saying you're wrong, Shane. I'm just saying no one's in your camp. And so I don't love it when everybody's on the same side of the market, quite frankly.
Well, the investment banks, I meant to pull that up. I will pull it up. So just to give everyone an idea, B of A, this is from Sam Rowe from the TKER newsletter, as of December 17th of 2025. B of A is the low estimate at 7,100. Oppenheimer is 8,100. So Jay, to your point, you can imagine those are the highs and lows. Everyone's kind of clustered around that 75 to 77 range. So yeah, nobody's good at this, right?
Including us.
That's right. Except for last year when I was the best.
By the way, let's not ham it up here, buddy. You won that one in the last 10 minutes of the market on Wednesday.
All that matters when the clock hits zero.
Okay. I remember we were talking on Wednesday. You're well, unless it really drops, and it did. It helped you out a lot. It was great.
Yeah.
Good for you.
So, but no, back to the point though, Jay. It's the prevailing thing is what seems so easy. Remember, everyone was like, oh, buy long bonds. And then rates went up. It's whoops, don't buy long bonds. Sure to have a recession. Whoops, no recession.
Yep.
So, all right, let's talk about where do we want to go next. Let's go to Fed funds. And we don't spend too much time on this, but I'll just read it off for the sake of expediency. I am 275 to 3. So what would that be? That would be 3 cuts, 325 basis point cuts. You are the same. Mike is 3 to 3.25, so 1 less cut. Shane is 3.25 to 350. I would say if we're going to have a recession, though, that seems aggressive. The Fed isn't going to do anything, but okay, we'll come back to that.
I was thinking the same thing when I was looking at Shane's numbers, but that's okay. You can have 2 stories, Shane. It's fine.
Well, we did say end of year, and so maybe they cut and then end of year they raise for some reason. So I don't know. Is it 2? Is it 3? Or is it 1? That's the question. Mike, let me go to you first. Okay, you're 3.25. So you're basically saying 2 cuts.
Yeah, I think that's probably the street consensus is about 2 right now. Powell's term ends. I think, they're probably going to replace him with someone who's going to want to continue to cut. So I do see 2, but I couldn't get myself to see 3.
Jay, you and I are the same. My reasoning is for what Mike just mentioned. They're probably bringing on a dovish 1 or 2 or maybe even more governors. Seems I feel like the right level of Fed funds is right around 3. And if you left it there, if inflation's 2, that's just 3. Just seems to make sense. I don't know, Jay, if you have any other
right level. What's that mean, the right level? Because I'm not sure why you say that. I don't disagree though with your who's going in, right? The reason Powell's out is the perception is he wasn't aggressive enough. By the way, I actually don't think he even should have cut the last time that he cut. But I think we're going to have a more dovish Fed, and so I'm with you. That's why I'm landing the same place as yours. I don't know what right looks like. We've had the conversation, Derek, of things like what where it should land versus inflation, right? Where the Fed funds rate should land. And so, where we're talking here is right at where inflation ended this year, right? Is that the right spot to be at for Treasury? I don't know. You should get paid a little something for lending your money to the government, no?
I mean, there's a difference, though. We'll get to the 10-year of what the Fed funds is on the short end, and it's been very compressed recently. But to me, I'm like, all right, if rates are around 3, that feels like a good risk-free rate. And then whether the back end of the curve pays you a term premium or not, well, that's another discussion. But I don't know. I think they'll cut a couple times and they'll stick there. Shane, all right. Did they not cut? And that's why that's why you're doing the recession? Maybe I'm coming around to the circular logic. Like they didn't cut enough and this caused the recession.
Yeah, I'm wondering if they're too slow to cut and that happens. That sort of ties into my 10-year prediction being higher, right? The idea is that I'm wondering if we don't go down in general, just nearly as much as people think. If we can continue to operate above 3, I don't disagree with you. And we probably do end up at 3, but I'm wondering if we just Powell doesn't cut we don't cut again until Powell's out. And then maybe things just run smoothly enough where they are that they don't feel a need to continue
But Shane, I mean, if the Fed came out and said, all right, we're doing this one last cut and then we're done, like that wouldn't be received well on Wall Street, right?
Probably not. No. And that's the other thing is like, again, if we were to see them slow down and we talk about that expectation curve, right? And Powell has brought up previously that, the Fed doesn't care what Wall Street is pricing in necessarily. At least, again, they say that. They're focused on operating based on the data that they get. So, again, probably missing with this one, but I think that would be cause, yes, for a pullback potentially.
Let's go to the 10-year. So my end of year 375, Jay 365, Mike 390, and Shane 4.20. So Jay, I'll go to you first. You're the low person of the four of us, and I think you're the low person overall. We have a couple other people who are on the broadcast with us. So I don't know, like as soon as I put this down for me, I was like, this is going to be wrong. And then you came in lower.
I'm looking where you landed.
375, you're 365.
Yeah, I don't know. It was a little bit of a number that was like right now we're in that dynamic of the Fed funds goes down and the 10-year goes up. Like,
yes,
how'd that happen, right? What's going on there? So I think that dynamic will rectify itself a little bit. So that was it. That was it for me. But look, it doesn't mean there's not going to be some fear in that number, right? I think we bump up against that 4.5 number of the high, but yeah, end of year 365 flattens the curve a little bit.
Yeah, you and I both are at 4.5 for the high. So this is one of those, I was like, once I put it down, I was like, I really should take this back. Like, I wish I could take this back. I feel like the right answer is probably like 4.5 or 5. And we're wrong on this, but we'll see. We'll see what happens. I just like last year, Jay, when we did our show, I felt like I had more conviction on where things were going. And I just don't have that much conviction on the 10-year right now.
Okay. Well, it's been an interesting component, although always, right? Rates always drive a lot of what happens in the market. We've talked about it a million times. I do think, though, this is the thing, Derek. We've talked about this. It may be the year of fixed income next year, right? It's been a while. And if that's the case, we're all probably on the high end here when I'm looking at this. Like, it's probably starting to get time, right? When you do that heat map of which asset classes do well each year, right? It's been a while since fixed income has really shown strength against everything else. It just may be one of those things where it's a cycle where that helps, right? So lower treasury rate means higher bond values, right? So it's just one of those things that I think this might be this outlier, Derek, of a like more rotation, right? People going to fly to safety. Shane, if you're right, which by the way, Shane, I took a look since 1950, only 4 times has the S&P been down in a calendar year of 15% or more, right? So your prediction's a little dire, right? I think, and if that's the case, you might see more people flying to fixed income.
Yeah, I mean, Shane, you were at 420 on the end of year, a high of 513. You know, it is, Jay, like right now, I think the prevailing argument is, rates are going higher. The long end is going higher. Tariffs, all this stuff. That hasn't happened so far. But Shane, when I see, I mean, you have this dichotomy between the recession and rates, but maybe you think that 513 is happening sooner. The Fed's not cutting, and it's part of the lead into a recession. But anything there, Shane, you want to add?
Yeah, I mean, 4.2 is where we're essentially at right now, right?
It's important. That's a great point.
And I'm basically giving you about 0.75 to 0.9 up and down, essentially in terms of range. I think that if they don't cut, or we don't get as many cuts as you would expect, I think yields on the back end might spike briefly. That's why I've got us hitting up past 5. But I could also see these, again, like Jay said, if there's flight to quality and people transition from fixed or equities into fixed income, that in theory should bring yields down. We've been running sideways for so long on the 10-year now, for almost 3 years now, it feels like, that I don't know. I wouldn't be surprised if we're basically unch this time next year in the 10-year.
Yeah, there's sort of the scenario, Shane, and then Mike, I'll bring you in on this. Like, they don't cut as much as people want. The 10-year goes to 513. You have your recession. I'm kind of playing this out in my mind. You go down to 347 on the low of flight to quality. Things stabilize. You wind up kind of leveling out, and you're back at 420. But Mike, you've got 390 as your year end, 420 as your high, 380 as your low.
Tight range I left myself with. Yeah,
like you don't really have that much going on next year, I'll be honest.
I think I don't have a lot of price moving going on. I think there's going to be this pull between what happens once the Fed cuts a couple times. Like what's next for the Fed? I think there's going to be this give and take between, could there be more cuts beyond that? Are we staying at 2.75 or 3 once there's a couple cuts, or is there a reason why the Fed may raise rates again in 2027?
Mike, it's not on here, but if you were to guess, what month is the last month that the Fed will do anything? July, August?
I was going to say August.
They don't have a meeting in August.
Okay.
That would be an emergency. September, July. There you go. So September, probably?
September.
Yeah. They have, it's almost 225 basis point cuts factored in through the September meeting. And then through December. Yeah. So that actually lines up with the probability. Shane, what about you? What do you think the last meeting is that the Fed will do something? And just to help everybody out here, January, March, April, June, July, September, October, December. I'm sure you were taking notes as I was saying that, but that's the meeting schedule.
I think you might get it in October or December. I think you might get an end of year.
Okay.
Too, if it, whether good or bad or ugly, I could see them cutting one last time year end, just sort of ease things a little bit more, and then maybe not raise in 27 if everything's fine. But I mean, like Mike said, who knows? But
I could see July, and it could be a 50 basis point cut in July.
Yeah, and halfway through and just be done. Yeah.
Well, it depends on the new membership, and I think the new leadership will be in by then. Jay, I bring this up because you've always said it doesn't necessarily matter that they're cutting rates or raising rates. The market just needs to know they're thinking about cutting, right? Like the market just wants that out there.
Yeah. And sometimes that's more powerful than actually cutting, right? We know that kind of moves things around. When is Powell out? May? Is that when his term ends?
Yeah.
Yeah. So I think he's probably going to be a little defiant here, right? So to your question, I think it's, maybe he gets one in between now and May, and then I think whoever comes in next hits it 2 in a row just to continue to show, the viability of like lowering rates and because that's what we're swapping out for, right? So we know so much is optics when it comes to this role, and it comes to the position within the marketplace. I mean, when you talk to the Fed, they say they have 2 tools: lowering rates and talking about lowering rates. Like, right. That's it. I mean, we know there's some other things on the periphery with, quantitative
balance sheet and sure. Yeah.
But really, that's what they say. So, look, they're going to talk a lot, and this is going to be the year of optics here, in my opinion, when it comes to the Fed chair. So, yeah, it's interesting if the trend continues to at least look like they're leaning that way, the market will continue to reward it. If that's the case.
There's also the chance they do curve control. Curve control meaning they start to buy certain areas on the interest rate curve to try and bring down housing rates, mortgage rates. Like it wouldn't surprise me for them to hammer the 10-year.
Man. Yeah, that seems like a little. I mean, look, when's the last time that they actually went in and did curve control?
I mean, they kind of did it a little bit.
2020?
I would love a lower interest rate on my house. I'm sure, Mike, you would too.
It's a midterm year. So I'm just thinking, new people in, new nominees. Maybe that's part of the modus operandus to kind of.
Yeah, it seems like an outlier, but yeah, sure.
All right. Well, I'll either be right or wrong about that. Probably wrong. Let's go to, inflation change, and then we'll do inflation and GDP. I have inflation at 2.5%. Not really brave there, my prediction, but GDP plus 3.8, Jay, you're plus 2.1, GDP plus 1, Mike at 2.5, inflation, GDP 2.4, Shane 2.6, GDP 3.5. Jay, you are the low of the 4 of us on inflation. I think you're sort of right around. Oh no, you're low on GDP. So let's go to you first.
Mine should be negative 3.5. I apologize. Sorry.
Negative. Oh,
he went for a recession, so it makes sense he meant to have a negative.
Yeah, GDP. I apologize.
Negative 3. That would be greater than 2008. All right, we'll come back to that.
Pretty bad. Shane's pretty bearish. He doesn't know it yet, but he seems pretty bearish.
Yeah. Oh, he knows.
It's the singular financing. It's the AI thing, man. I'm a hater, I guess. But
okay. All right. It looks like we're paying more for our hedges next year. Okay. So you're going to ask me about inflation or GDP. So look, GDP.
Yeah, talk about both of them.
Like this was it feels like the trajectory is this was just buck the trend, right? The 3, 3.5, 4, even 4. My original was 4, right? And I was like, everybody's got a pretty strong GDP next year. It's weird, right, for me to have earnings go and GDP to be flat. And different stories are in my numbers here. I think when I think about the bad side of the potential downside here, I think we've had quite the international component will matter here. I don't know. I came in low because it felt like it's been too good. It surprised everybody recently jumping back up, right? We got that print after the government shutdown and kind of like blew everybody's mind away, right? That we were coming in at 4. I don't think anybody thought that at all. So I think it's just a retracement to the middle on that one. And inflation, yeah, I think because actually for the point of a slowing economy, I think inflation does continue to tick down. I know it's been stubborn, but I think it ticks down because of GDP being down. Contrary to buying farm equipment, I would say inflation is coming down.
I actually like your 2.1, and I wish I was there because as I thought about it more, housing is so laggy. And I think the real-time data on like Zillow and some of the other measures, and housing is a big part of inflation, the CPI. So I think you're probably going to be more right than me on that. I wish I could read
death right there.
Yeah, I know. Inflation is going to be 7 next year then.
Oh gosh.
Yeah, I mean, I don't really have too much to add. I was really boring. I just put it in within a standard deviation range of 2%.
Is pretty high, right? I mean, at 3.8.
Yeah, I think I'm the highest on the board. And I'll tell you why. I think we're getting back to the 1990s where we had steady nominal, not inflation adjusted, but nominal GDP over 5%. And I think because inflation is going to be relatively tame, that's why I came in with the 3.8. I think GDP is actually going to run. Remember, a lot of manufacturing coming back, and the weak dollar plays into all this. So I think it's setting up for a good GDP. That's my thought.
I'm going to tell you, I like Mike's number the best at 2.5, 2.4.
Well, that's pretty safe. Like Mike, you're 2.4, you're 2.5. You could have swapped the inflation with the GDP, but
yeah, it's safe. It's safe. I mean, inflation seems to be trending that way. I don't have a whole lot to add. It's kind of boring, fastball down the middle, but yeah.
And the fact that you really you're not dismissing these two categories, but you're almost saying it's not really going to affect too much, almost tells me that maybe these will come in and affect things more than any of us is thinking about. Of course, we can go to Shane. I mean, Shane has a negative GDP. To put in perspective, take out 2020, and you have to go back to Q2 of 2009 for year over year was minus 3.26. Apparently, we're going to have the negative GDP as we did in the great financial crisis. But by the way, the audience knows we're always sarcastic on this, Shane. But you're going to have the negative GDP of the great financial crisis, but only be down 15%.
So,
okay.
Yeah. No, I think that there's going to be another V-shape sort of, we're going to pull down really hard mid-year. Powell doesn't cut. Maybe once, maybe not at all. And I think if Powell doesn't cut all the way through June, that could send the market for a whirl. I think that in terms of GDP pulling back this much, it's realistically going to be the data centers, the things of that nature. If there's nothing more than that going on, I just don't know how. And maybe it will. Maybe it will support the bulk of GDP growth again this year. But if that stalls by any means whatsoever, I don't know. You're going to see, I think, a big turnaround.
All right. I mean, the economy and the market are not necessarily one and the same. So it seems to be that your thesis is this is an economic issue. I mean, you can't negative 3.5 GDP. That's a big negative number.
Absolutely. I mean, the circular financing thing, I'm worried too much, and maybe I should have said the market's going to go lower if this is where I'm leaning. 15% is maybe a little too.
Like, yeah, you're coming in at like one of the worst years in the last 50, Shane.
But like the other thing is this: if I don't think the market and the economy are one and the same. Markets will stay irrational way longer than you'll stay solid, I think is the old saying. I wouldn't be surprised if you have a huge pullback at some point this year that gets pulled or bought back up, to a down 15, down 20. I'm not sure the numbers on the 2000s, but I mean, if the AI thing starts to roll over for some reason, and again, I hope I'm wrong, I don't think it's going to be pretty. So
I'll remind everybody that the Mag 7, but for Google and Nvidia, the rest of the stocks trailed the market this year. And we were on, I'm sure you listened to this already, Jay, in the car, but our show last week, we talked about how it has been lazy by people thinking about, oh, it's only the Mag 7, when Spain, Korea, many international markets, different sector of the market have all been at like all-time highs. So I think it's a misnomer to think about all these returns have been just from the Mag 7. So I don't know. I mean, look, Shane, I don't think you're wrong that there is a little bit of circular financing. And for the audience, just to explain what that is, it means, let's say two companies, one company says, I want to buy your products, but we don't have cash in the register. And the other company says, great, we'll loan you the money to buy stuff from us, and then you just owe us the interest rate. Right, Shane? I mean, that's kind of when you're calling circular financing, correct?
Exactly. And I just, like, at some point, returns have to start showing up. I don't know the exact data on OpenAI, but I know I don't think they're profitable at this point. And so...
but they're not public either.
No, and that's true. But it just... I also, and we're not going to get into this, please don't open this. We've talked about it before.
Himalayan money markets? No, that's next week.
No. And it's not Japan either. It's the depreciation on the chips and the accounting.
Let's save that for next week.
Yes.
All right. Let's talk about the VIX. So I'm at, we always bring out the VIX high. So I said 53, Jay, you're 43, Mike, you're 30, and Shane, 33.95. Mike, let's start with you first. You were at the low. When was the last time we had a high of only 30 in a year for the VIX? I'm just looking at that up as we're talking. But tell me about why. I'll look that up. What are you thinking on the VIX?
I think there's going to be a pullback. I don't think it's going to be, anything that's going to really spook the market or make the VIX go above 30. I just, I sort of look at some recent pullbacks and where the VIX landed, and it's right around that 30 number. If you look at where I think things are going to be year end and the highs and the lows, it sort of lines up. I do think there will be a pullback. I just don't think it's going to be anything catastrophic that's going to make the VIX go above 30.
So I'm just looking. So August 5th, that was the unwinding of the yen carry trade. Jay, you remember that well, right? High of 65.73.
It wasn't real, but it is what it is.
It is what it is, right? And then we have to go to April 7th, and that was right about 60. Jay, you and I talked about that back when that happened. And I think it's worth mentioning, yes, the VIX went up to that level, but of course you can't trade the VIX. But you and I discussed that. Do you want to just talk for the audience why we say that wasn't quote unquote real because of how the options work?
Yeah. Okay. So the goes a little to the boring part, which is the calculation of the VIX, which is, the volatility of the S&P options. And so that overnight move with the Japanese carry trade being unwound, caused the S&P to move into a spot where, even though there was very little trading before it happened, because it was all pre-market on a Monday morning, there was a lot of open interest right there. So the market had moved to where all the hedges had been bought, like 5, 6, 7% below the market. There was a lot of open interest there. And usually that ends up being the most time value in an option, right? And so just even if nobody made a single trade in the S&P options, the drop in the S&P index would have forced the VIX to recalculate at a higher level just because of the existing options that were there before it started. So it's a little bit of a fault in the calculation of the VIX. It'd be nice if you could actually calculate the VIX off of traded options only. And by the way, that rectifies itself in about the first 5 minutes of trading. But going into the market open that day, the market had dropped, put it at a level where there was so much open interest, where all the hedges were, that it caused quite a bit of pop. It just in the calculation, and then it fixed itself. So that didn't stay very long. It wasn't like you said, wasn't a traded price. Couldn't trade it anyway. But but when you look at the futures, which you can trade, which is where you say, hey, this is where I think the VIX is going to be, it was very, very lazy. Like, did the futures even get above 40 that morning?
Yeah, there's that spread between the futures price and the VIX. When that spread is wide, that illustrates exactly what you're talking about, Jay.
Yeah. So look, I think it's the VIX is always interesting, but look, it is what it is. It's what the math said. The VIX is not a traded index; it's a calculated index. The futures are probably a better number here, but nobody, the futures eventually always track to where the VIX is, right? They eventually close that gap. They have to, because when they're done, when they mature, when they expire, they're going to end right where the VIX was. So eventually, it does eventually matter, but that was not the case in this situation. So I'm going to say, how do you have one of the worst markets ever, and you got a high of the VIX of 33.9? This has got to be the other side. This is your safe bet, right?
So partially yes, partially no. I'll point out, all right, the VIX in 2000 topped at about 35, upper 34s. And the market in 2000, the S&P was down over 10%. So, and then in 2022, I don't think let's see, where were we? In 2022.
Well, 2022 was the recession year. Yeah. So you had 38.
Yeah, 37, 38. But even then, that's really not that high. And that was over 20% something down on the year. So partial safe bet. Yes. Partial, even if we do have a down year, and this is more in line probably with being down 14% than the GDP number. It's just going to be a slow, steady churn. It's going to be controlled. I don't think it's going to be like April where vol just, explodes. Everything gets out of sync. I think it'd be a slow burn down.
Derek, I always ask this one. Is this the intraday high on the VIX or the closing high? I went with the closing, but I didn't know.
What is on ThinkPipes? What chart? What does that show? Is that the actual high or the closing high? Whatever's on there.
Well, whatever your time frame is, right? Like the top of the candle will be intraday.
Okay, so it's probably the intraday.
Okay. All right.
I think it's intraday. I mean, Scott had it last year and he had 63 and he won that one last year. So
okay. Yeah, right.
Well, look, you're at 43, I'm at 53. I honestly with mine, I just put it where I thought if we did have some sort of unknown blow up and based upon what happened with the yen carry trade, it would go there.
Yeah, I mean, getting to that 6160, which is your S&P low, like if that happens in a hurry, 50 VIX is possible for sure.
43 seems safer, though, what you picked.
I want to go higher
more reasonable.
Now that I know it's not a closing, it's a high of the day, but I guess I'll stick with what I'll stick with.
All right. Let's see. Let's do these pretty quickly. Oil, Bitcoin, gold, and the dollar index. All right. Oil, Jay, you and I are at 65. Mike, you're at 50. Shane, you're at 48. What do we close at today? Below 50, right? I think was it 47 today?
Yeah, about West Texas. 57. Yeah. Sorry, 57, I think.
Was it 57? Okay.
Yeah.
So it tells you how much, research I'm doing on oil prices, right? Because these are the West Texas Intermediate futures. Jay, mine's a little bit arbitrary. I thought there's a chance that the cure for low oil prices is low oil prices and supply will come off. And so I said, we'll get a little bit of a bump. And oil is so out of favor, which means when nobody wants it, probably maybe should look at it. Jay, I don't know how you came to your 65, but anything you want to add?
Yeah, I watched Landman for a while, and I thought 65 was the right price. That is not okay.
I think it's perfect.
I don't think we pay that much attention to it, but I think always a little bit of conflict in the Middle East will help. Maybe nothing like super dramatic here.
Oil matters when it matters, Jay. Remember, 2008, the oil price was embedded, burning into the screen on CNBC. Remember that?
My God. Yeah. And as an inflation component, it ends up being a push there. So, I'm on the wrong side of that, but because my prediction is 65 is higher, but just the normal cycles, I think it just matters where the year ends. It's almost like whoever has the ball last wins the game. That feels like where oil is going to land. We don't do a ton of direct commodity products, right? So it's one of those things that I feel like probably gets a little less attention than the other pieces that we have here.
Yeah, no, that's fair enough. Mike, go to you first. Okay, you're at 50, right? So how'd you come up with that?
Well, it's, I didn't do a whole lot of homework, but, I think demand probably continues to be stable. Lower rates maybe encourage a little bit more production.
All right. Shane, you are, yours makes sense being a little lower because of how you are looking at the economy.
Slowdown in spending coupled with an increase in supply based on what happens with the situation with Venezuela and the Middle East. I feel like we're in a situation where we're very close with some people nation-wise that have lots of oil and we have good relations with them. So that I think bodes well for the price of oil for us. And then, obviously increasing supply, or say we started doing business with Venezuela and they have a lot, that increases the supply, likely drives down price.
All right. Let's go to Bitcoin. So no surprise here, Jay. I came in at 50,000. It's actually the same thing I picked last year. You were at 175,000, Mike 110,000, Shane 135,000. Jay, to you first. You are the crypto bull of the group. Higher than anybody else. Second highest was 160,000 from somebody else not on the call. Michael Saylor would like this.
To the moon. That's it.
All right. Anything else there?
You want the fundamental reasoning behind Bitcoin going up? I don't have one. I would say this. You look at the average returns of Bitcoin over its lifetime, they're significantly higher than the market. I think where we landed here feels like the bottom of the chart. I think we've got more to go on the up channel. That's it.
All right, Shane, you're 135, also bullish on Bitcoin from here. Where are we in today? About 89,000 or so?
Yeah, we're about a 50% increase on the year is my expectation. I think that gold is going to actually pull back a little bit, and I think that Bitcoin finally proves itself as the detachment from straight equity, and it sort of takes the place of gold after gold's recent run up. I think there's going to be sort of outflows of that and inflows into Bitcoin, and then lower cost of oil obviously improves energy, which is good for that industry given the nature of it. So I think Bitcoin has a good year this year.
Mike, 110,000. So also bullish from here. Mild bull, I would put you at, Mike.
Yeah, only 25%. Yeah, I do think we're bottoming here. I think it might take some time. We'll see some more sideways trade in Bitcoin, which has been interesting to watch. And I think as the story sort of continues to become a little bit more quiet, you have the buyers come back in and then people remember it again.
Mike, you and I have talked about how yes, getting ETFs that hold spot Bitcoin was quote unquote good for Bitcoin because it brought new buyers. But Mike, you and I have been saying like this also brings sellers. Like these people are quicker to sell. They're not the quote unquote, holders forever. Is in 26, where do the ETF fund flows go as far as Bitcoin?
I think they come in.
You do? Okay.
Yeah, I think that's part of the reason why we sort of break out of this sideways range. I think maybe institutions continue to adopt it a bit more. It is becoming a really big market. So, I could see the big ups and downs gradually dying down here. But I do think flows will come in.
All right. I'm at 50,000. Anyone who listens know I've been a crypto skeptic at times. And I don't know. I just thought I wanted to be the lowest on the board again. But I do think it's easier for people to sell now. And we saw this. Everyone wanted it when it was going up. When things go down, people kind of switch. So, but I mean, gold has done better than Bitcoin, which has baffled some investors. Jay, you're the high number here, 6,000 on gold. I'm 52.18. Mike is 47.50. Shane, as you mentioned earlier, 36.75. Shane, you mentioned that this is really going to pull back. I mean, it wouldn't be a surprise given how much it's been up over the last couple of years, but it does buck the trend of what's in motion and what's trending higher continues higher. Shane, you have people switching out of Bitcoin or switching from gold to Bitcoin. Anything else on the gold price here?
Yeah, I mean, I think you've also got some surprises potentially coming from the administration and just central banks in general with crypto. I think that news of that would create outflows out of it and into that space. I also just think that I think inflation's tamed. My inflation prediction was 2.6%, pretty close in line with I think yours there at 2.5. So I don't think inflation's going to get that crazy anymore. And with that comes I don't think that kind of kills the inflation narratives on commodities potentially. Again, I've got oil going down too. So, I also think that gold's another one of those supply demand things. If demand stalls for any reason and or a large amount of supply is discovered or mining picks back up, you've got downward pressure on price there potentially. I'm also wondering too with Bitcoin, do you guys think that the price stability is picked up because of the addition of options trading on it? As it's become more listed, it's become almost more marketized and therefore just lower vol?
I mean, I think it's because of ETFs available now. And it's just more of a
easy access.
Yeah, I mean, I don't know, Jay, if you have any thoughts, but that's my thought. I mean, just more products available with Bitcoin in it.
Yeah, I mean, there's going to be, it feels like more demand across the board, right? Even if you have this price compression, more demand across the board. I think that applies there. But I do like the argument, the point that Shane's making that look, if there's flowing back into Bitcoin out of gold, that might be an interesting, right? Those two stores of value might be an interesting dynamic. I hadn't put those two together, but sure, I'd always kind of put them in parallel, but that's almost a pair trade you got there, Shane, right? That's an interesting pair trade.
Almost a little one. Mike, you're at 47.50, so you're still gaining. What is that, like a 10% gain, which would seem mild after the last couple of years, but anything you want to add to any color you want to put on your prediction there, Mike?
Yeah, I mean, I think this run has been pretty incredible. I still think that there's some upside. I don't think it's being talked enough about yet. I don't know. At first I had a negative number there. I flip-flopped a bunch on this one. So I sort of played it safe and said 15%, something like that. Because I do, at the end of the day, think there's more upside. I think there's still a story here that people haven't heard.
Jay, I'm at 52.18. I'll let you go last. The only reason why I didn't go as high as you or higher, because I feel like of the run it's had, maybe the appreciation slows down. But to Mike's point, like we haven't been getting calls from either, our clients or like our advisors who we deal with. We run strategies for advisors who have clients. Like we're not getting the calls to say, oh, do you have a goal? Do you have this? I feel like it's been a little bit of a quiet ascension. I don't know. I mean, I think I'd rather have your pick, Jay, but you're 6,000. Talk about why you think it's going that much higher. And that would be from here. What is that? 1,700 points? Something like that?
Yeah. I wanted to pick something that was kind of extreme on this one. So looks like success. But when I think about, I'll tie it to the dollar index, which we didn't really get much into it. And that's like the most uninteresting one here, but I will tie it to that. Value goes less, gold goes more. I think, you look at the trends of what's happening internationally, and countries are gonna they're tired of the dollar being weaponized, and they're gonna just build up their cache of gold as a store of assets. So it's again, it's a moonshot at 6,000. I went high on all of these only because you just don't know which one of these is going to hit or one. I don't think anybody thought gold was going to do what it did. I won last year, and I wasn't even close to what the number was. Mm-hmm. I'll throw that out there. This one too. Like, okay, let's just come in high. I do think so much of it is. I think 5,000 is a given. I know that's nobody should take that for real, but it just feels like that's where it's going to get drawn to that, and there will be some momentum there, and maybe it plays through to the end of the year.
Yeah, I mean, I still feel like even though it's had this crazy run, I made the point on I think it was last week or the week before. In 2008, Jay, I was getting calls from people, friends of mine, who never have traded oil commodities, being like, hey, if I wanted to buy an oil commodity future, how would I do it? And I'm like, oh my God, this just tells me it's the top. I haven't gotten those calls yet. I don't know if you have, but
Nope.
My wife asked if we should buy gold, and that's what scared me about it. And that was 3 months ago. She, I think, saw something on TikTok about it. But a blind squirrel finds a nut every once in a while, right?
But that's what we need. We need more people like your wife saying who don't necessarily watch the markets every day to be like, oh, this asset's going up. I saw this somewhere. And maybe it's just the crypto charlatans have crowded out all the gold bugs, who are on there. But
you also have an entire generation of people, investors, young ones like myself, who our entire life it's sort of been, hey, these gold bugs are crazy, and Bitcoin is, why would you not be in Bitcoin? And Bitcoin's made a lot of noise the past 1 to 2 years, and if you've held it the past year, you've been sitting here on the bench watching the gold crowd go crazy, and there could be more outflows of Bitcoin and more into gold. I could be way wrong, and the trade would be the opposite. So,
all right, dollar index. We don't spend any time on this really. I'm at 99, so I think it's 98.7 right now. The dollar index is a basket of currencies against the dollar. It's very Eurocentric, meaning you got the euro, you got some of the Nordic countries, Japan, Canada's in there. So it's very correlated to the euro. But I'm at 99, Jay, you're at 92, so I would be up a tad. Mike is at 94, Shane is at 92 as well. I don't think we have to spend time on this because we're pretty much saying it's mildly lower to a tad higher. I don't think there's really much. I wish I could redo this one because I feel like it's too close to the price right now.
Yeah. Yeah, and based on your gold call, yeah, that makes more sense too.
Yep. So, all right. Before we sign off, Jay, any theme, any off the wall predictions, something no one sees coming that you think, this might happen?
I always want us to do like that bingo card, right? Everybody throws the random things that can happen. You throw them in the wheel and you spin it around. Everybody has a bingo card that comes out. Look, I will go back to, as much as all the predictions that we're going to make, I think there's two things that impact the markets. It's corporate earnings and it's interest rates. And so if you could tie back to those things, if you think about those things, if you can think about anything that's going to happen, like peace in Ukraine, or Russia invades Poland, or there's more stress around Taiwan, right? You think of those global events and how they can impact the markets. Does it hit interest rates? Does it hit corporate earnings? Keep those things in mind. If I was to think about like the surprise of, it wasn't really this year because AI was really picking up even in 2023, right? NVIDIA told us all this was coming, right? When you think about what's going to be that dynamic that can really change for us, I do think the everyday people that are using AI integrated into their life make a lot of these things, can potentially change these numbers, right? When you think about black swans, the internet boom was a black swan event, just a good one, right? They're not always negative, right? It's, a large market moving event and was, predictable if you took a step back and looked. Like when I hear, when I just see everybody I know with like hopping on chat and just using it in everyday life, like I think we've yet to really realize that. I think that's a biggie. I think crypto, the story remains kind of boring. The one thing that, if I had to pick the outlier of anything, it's we really get quantum computing to find its way into our devices, right? And maybe by the end of next year, that things are really different with our ability to process and speed to process, and even making AI more affordable and more accessible. So I'm going to go more. I'm double downing on tech, Derek, for next year.
Oh, I agree. That's why I kind of like semis very early, because the picks and shovels. But I'm with you, and I think this. Yeah, I mean, it's either a continuation of the technological revolution that started in the late 80s, or it's a new branch of that. Colada Perez, who wrote Technological Revolutions and Financial Capital, I think was on a podcast, and she thinks it's a continuation. So if my outlier prediction is that OpenAI as a company fails, but it doesn't mean AI fails. And it just reminds me of the internet bubble back in the day where the technology remained. It accreted to all the old line companies, or some of the remaining. But I mean, Netscape went away, Spyglass, Excite, remember all those? So that's my outlet. I mean, it's not a public company anyway. So, and we don't know what their numbers are. If they ever file to go public, we'll see the S1. Maybe I'll change my mind then. The only other thing I was going to mention is consumer sentiment is almost as low as it was at the end of June of 2022 in a bear market.
Wow.
And the fact that consumer sentiment is this low as we are at all-time highs makes no sense to me. One of these is going to be wrong. And I kind of think I like the fact that this many people are bearish. Like, seems pretty good. So, all right. Shane, Mike, anything else before we wrap up and go? We got to go to our recommendations, but we're already kind of a little over on time here.
No, I'm good. Let's go to recommendations.
All right. Shane, what's the recommendation? You get one this week.
I'm going to go with, it's my kid's favorite movie. Right now it's Star Wars 5. That's The Empire Strikes Back.
Derek, who calls it Star Wars 5? Nobody, Shane.
Only people who were born after the first 3 came out, right?
I remember standing online to watch that one. Yeah.
He loves it. He likes the snow scene, the Hoth, right? But
the Hoth system, yeah. That's good. That's good. Empire. Just call that one Empire, dude. Everybody knows what that one is.
Jay, was that your favorite one of the first 3?
I think the most dramatic, right? Like, but no, I liked Jedi. I like number 6.
Okay. I do remember waiting in line, probably at Paramus Park. I might have been in the same line as you, Jay.
Could have been in the same line, dude. It was actually I was at Paramus RKO Theater on Route 4. Not that's not even there anymore. But if you went to Paramus Park, I gotcha. That's good theater, still there.
Yeah. So can you imagine that though? Like young people now, like the thought of, oh, you got to go a couple hours in advance. You got to wait in line, and then maybe you'll get a ticket because you actually don't know if you're going to get up to the window in time.
You didn't even know. Yeah, it was wild. I know. Now it seems crazy. So silly.
All right, Mike. Recommendation.
Yes, I watched the F1 movie. I think maybe you've talked about this one previously.
I have.
But
so good.
Very, very well done.
So good.
If you like the Drive to Survive series, you'll love the movie. Very easy to watch, and loved it.
Well, I'm glad you finally caught on to that. And yeah, I thought it was great. It was great. The opening sequence is great. The race sequence was great. Jay, you liked it too, right?
Oh, yeah. I've seen it 3 times. It's great.
Yeah.
I'll watch with anybody that wants to watch that movie.
All right. What are you doing after this? We'll
let's put it on Zoom. We'll watch it together. Remember that?
Just watch it.
During COVID, you watch movies together? All right.
Yeah. All right, Jay, how about you? Any recommendations this week?
I haven't been here for a long, long time. So I may give you an old one that I would have given. And I'm trying to get as many people to watch it because I'm hoping they put a lot of money into the second season. Alien Earth on Hulu was awesome. Great show. Great.
Alien Earth. I'm imagining this is a science fiction.
Aliens. Yeah, sci-fi's aliens. So the company goes out, gets samples, brings it back to Earth. Guess what? Spaceship crashes into Earth and the aliens are loose. But it's not really about the aliens. So it's good. It's a good show. So, and I love the way they end. Every episode ends with a hard rock or heavy metal song, to really kick it in to when they end the show, really good song. A lot of shows do that. So if you haven't watched that one, I would watch it. Really well done.
You can have one more recommendation because you haven't been here in so long. So
no, you said one. I'm going to go with one. I had to pick one. I'm going to go with Alien Earth. Although I did watch Stranger Things, I like the way they ended that.
I've only seen season 1.
Jackson never got into it.
No, it was when he was younger that came out. So
I mean, yeah, all right, I guess so. Well, look, it's I watched all 5 seasons. I think they ended it well.
All right. I would almost pulled a mic and was going to recommend the outdoor NHL game. But so, Jay, you haven't been on in a bit. Mike has a habit of recommending sporting events that will have already happened by the time people listen to it. So
that have already happened?
Yeah.
No, they're going to happen over the weekend, but the podcast doesn't come out until after.
He's like, I recommend the Ryder Cup, and he's like, after the episode,
I was right about the Ryder Cup too. It was
great.
It was too late.
Yeah, Mike's like, I guess I shouldn't have mentioned that because that's going to be done by the time this comes out. We're like,
Illinois,
you did it again, didn't you?
I did. I did it last time 2 weeks ago.
That's right. Oh, that was funny. All right. I'm gonna break the rules. Give 2 quick ones. I finished watching The Pit. This is a continuation of a pre-recommendation. It's graphic. It's on HBO Max, but I liked it. I'll give it a strong buy recommendation. I did watch George Clooney's Netflix movie, Jay Kelly. I don't know how I wound up watching it. It just came on. I was watching it, and it's a hold recommendation for me. I don't think I'd watch it again, but it was entertaining. It was George Clooney, Adam Sandler, an aging movie star facing family and career regrets. Has anybody seen that?
Yes.
Okay. Would you put a hold on it? Or?
Yeah. Wouldn't watch it again.
It's not like a don't buy. It's just a hold.
Yeah, I agree.
All right, folks. Well, for Jay, Mike, Shane, and myself, we did it. We got through the show. These are all the things that are probably not going to happen. Don't trade on these. No, seriously, don't trade on them. And Jay, maybe you'll be back some point between now and the next year. We never know.
Nice. You can invite me and maybe I'll come.
All right, there you go. Thanks, everyone. And thanks for listening. Hopefully people enjoy this, and we'll talk to you again next week.